I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast, and it's a different podcast format than everything else out there. I bring together a new and experienced investor on the episodes and let the aspiring investor ask the questions that they need answered to push their business along to the next level. And if you're an aspiring apartment investor yourself, you probably have the same questions. So now, before we get to the next episode, make sure you hit the subscribe button and that little bell below to make sure you get notified every time we post a new episode. And now, enjoy the show.
What advice would you give new investor that's trying to break in the market right now, being the way it is?
Being in the Midwest, I always would say buy for cash flow. And so the first deal you get done might not be in a huge metropolitan area. Like I said, when you go into some of these bigger core markets, you're fighting against people that are institutional buyers. Find a market that is kind of maybe even like a tertiary market that you feel is comfortable, that you feel is safe, that cash flows well, that, maybe it's in your backyard, maybe it's in, area where you have family or some, you have some boots on the ground there that you can kind of understand the market better. And maybe that's where you try to go get your first deal done at. And once you have it done, then you can come back to that core market and say, hey, I have a resume now.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. I'm very excited for today's show. It's one of our Ask the Expert episodes. We have two great people on the line with us today. We got Seth Teagle and Lupei Chou. And as we typically do, we introduce our experienced investor first. So Seth, you're up to bat. Welcome to the show.
Yeah, well, thanks for having me on, Brian.
Yeah. Well, hey, Seth, do us a favor and tell us a little bit about your background and history and kind of weave a tale on how you got into this multifamily investing space.
Yeah, so try to keep the long story short and fill it with highlights. But about 6 or 7 years ago, I wanted to get into real estate. I've been a career firefighter for the last 21 years and have always enjoyed that career. But I realized that I was working all the time. I was working a lot of overtime. My wife and I started having kids. Our family started expanding, and I found myself kind of giving more of my time than I wanted to try to make ends meet and just kind of get, there's no, I wouldn't say paycheck to paycheck, but as far as like down the road, future retirement, things like that, I always knew that I need to be planning for that, but wasn't really sure how to get there. Didn't know anybody at the time that was doing real estate. Ran into a friend of mine that I went to college with who I went into the fire service and then he went into real estate. And when I reconnected with him, he had grown massively with investing, house flipping, had a pretty big following, kind of before it was a thing. And, we got to sit down and kind of talk about that. And it was really eye-opening for me. He lives in another state. So I then started looking for somebody local to learn from and met a guy that was a contractor who ultimately I was able to, we met and I kind of understood what his kind of pain points were or what his problems for growth were at the time. And so I offered to work for free, managing his rental portfolio and then managing some of his projects that he was doing. And that was something that he was just kind of struggling to do efficiently. And the fire service, my schedule is 24 hours on, then I have 2 days off. So I was able to put quite a bit of time into growing his business and his portfolio. And, I did that for a year. And while I was doing that, and probably the year before, I was studying real estate investing via podcasts, books, YouTube, like anything I could find, get my hands on. And through the experience that I gained working with him, it really made me understand and see that what was scalable was multifamily versus what he was doing, which was house flipping and single family rentals. And there's a lot of people I know that have scaled wholesaling, they've scaled single family rentals, they've scaled house flipping. But for me, trying to maintain a career and a family, the quickest way for me to get where I wanted to go was multifamily. And I had always envisioned doing small multifamily initially. But when I kind of pitched this idea to an investor friend of mine who had equity in single family homes, and he had rentals for quite a while, I was like, why don't, we'll take the money I have, take the money you have, let's put it together. Let's go find the biggest thing that we can buy. And that first purchase was a 50 unit. So nice. I kind of jumped in with both feet. It was just the two of us in that deal. And that was kind of the beginning of my investing journey.
Yeah. Something that I really like that you said, and I'll just reiterate, is you offered to go work for someone who was successful. You offered to work for free for somebody who was successful in this industry. Can you tell me how that helped you, later on?
Yeah. So it gave me confidence, right? I had been kind of, I'm more of like an on the job learner or hands-on learner. I feel like you can read 100 books, you can listen to 1,000 podcasts, but you'll learn more on that very first deal you do than you've learned on probably a lot of those things. And it really just kind of cements some of the fundamentals. And so for me, it gave me the ability to go talk to a lender and feel like I knew what I was doing, even though I didn't, I hadn't actually bought anything yet. I was able to kind of go in and speak the language, put a business plan together. I was able to call brokers and have confidence to know that I would be able to execute on a deal if I got it. And then, like I said, just even it gave me more experience managing contractors, because on the initial purchase, it was me managing those guys and running the team and making sure that everything was done correctly, materials ordered correctly, that it was all efficient. And I learned all that while I was working for him.
Yeah. And I absolutely love that you do that. It's something that, I think a lot of times I look at stuff like that and I think, man, I'd love to just do that for free for somebody, but I'm always hesitant to take that, step for free. But, and I'm also a big fan of Robert Kiyosaki, and he recommends, getting jobs or getting employed to learn. And that's exactly what you did. And it's obviously paid dividends for you. So, kudos to you for being able to do that. So for his first purchase was a 50 unit. It was you and a partner, not syndicated, just pulled your money together, formed a partnership, bought the 50 unit. Can you tell us a little bit more about that particular property? Where was it? Go ahead.
It was, so it's in a kind of like a tertiary market outside of Columbus. It was in Zanesville, Ohio, which is not like a, you don't have a ton of out of state and equity groups beating down the door to get into that market. Right. But it was a market that I knew. I did my initial data polls and looking at different things. And I knew that the city is decent size and that 50% of the population rents. So I knew that if we could, at least I felt like if we could put a quality product on the market, that we would have enough tenant base there that we could rent and stay pretty full, because it's an area where there's a lot of older mom and pop owners that are not, I wouldn't say they don't take care of their places, but run down, deferred maintenance, that's the kind of like the dime a dozen down there where, you can find. So I really believe that if we put out a quality product, and we could take the rent, the rent that we were seeing are $200 to $300 more than what the seller was getting. And that was kind of what I evaluated was, he lived a couple hours away. When I went down there to the property and I met who was running it, I was, he was basically a maintenance person, warm body that was there on the ground, and it wasn't running it like I would run it. So all of those things were, I saw value in those. And really for me too, the location was where it sat. It was at the entrance to a kind of like a B-class neighborhood. And it was definitely the eyesore of that area. And it wasn't, surrounded by a bunch of other like problem areas. It was surrounded by a nice neighborhood where I knew that if it had the right management and had the right person owning it and putting in the time, that it could be really great. So that was kind of some of the reasons why we like that property.
Yeah, I mean, there's a lot of goodness there, and I talk with a lot of people who are starting out, and a lot of people ask, where, and I think any place where you have a competitive advantage over somebody else is a good where to start. And you're starting in, in your own backyard, essentially, close to where you're at. And, I think there's lots of good reasons to do that. You're able to get there quickly, the area better, boots on the ground. And let's face it, Columbus is not a bad place to invest in. There's also a lot of growth going in that Columbus metro too. So I think you have a lot of good reasons for investing there to begin with. So, so how long ago was that, and what have you guys done since?
So we bought that I think I bought that in 2016.
Okay.
And then we refied at 13 months, a little over that, and we basically pulled out $1 million of equity on that deal, which was phenomenal. Nice. First deal. And a lot of things I learned in that, it could be a whole nother story on the lessons going into that I didn't know what I didn't know at the time. And luckily we were able to pull it off and it was successful. But what it did was, and you kind of asked me earlier how I structured that. So it was a joint venture. I gave up 50%. I was like, I'm putting in capital, taking the risk. I'm giving up my time, but I was like, I don't care what I have to do to get the first deal done, because I had been shut out by 4 banks because I didn't have any experience. The deal cash flowed well. They believed in the pro forma that I put together. They liked me, but I hadn't bridged the gap of experience enough for them to want to take the risk to do the loan. So,
right.
I was at a point where I was like, I didn't care what I had to do or what I had to give up, but I wanted to get the first deal done so that I could start that resume and really go to a limited partner or somebody, down the road and say, I really do have experience, and look at the success of this project. So I think that one was the most important as far as success rate goes. And then since then, it springboarded us into really being in a position where we can grow. So we have locally here now in Central Ohio, we have over 600 doors. We've started a property management company at the beginning of last year that manages about 400 units that we have. Then the other 2 we use 2 third-party managers, but they're kind of like strategic partners where they're involved in the deal at some point. One of them was an LP investor, but he also got some equity. And I did that because, I needed to make sure that he was going to run the properties the way that, not only that I would run it, but if you're part owner, you're going to run it like you own it. And so
you got a vested interest, not to screw it up. Yeah. So.
And that freed me up to be able to continue to pursue other things in Central Ohio where, I didn't have to be babysitting that property all the time. And so, and we've done all that in the last few years. And then we've worked with some out-of-state groups that I think you and I have some common friends that are buying in Columbus. And like I said, the Columbus Metro in the beginning for me didn't make a whole lot of sense because we were playing against equity groups, hedge funds, out of state and overseas people that were bringing in money that were buying at very low cap rates, and trying to get the plane off the ground. It was hard to compete in that. So we went out into the tertiary areas and have been very successful, and we like those areas because they cash flow very well. The price per door is still low, but even this year, right now, we have kind of in the works of getting into 2 or 3 deals within the metro area, Class A, that are, that 5 years ago, I wouldn't have been able to do that. And so, it's all kind of like worked out, but that's really, like I said, that first deal led into all those different things. And, now we GP in other deals out of state, kind of, we might be KP, or we might bring in equity, or we might do different things to be involved in those deals. And then, we have some mentoring that we do to some guys that want to get into the syndication space or just apartments in general. And, we've learned so much over the deals that we've done now that, we can help them they don't take any missteps. Because as you're buying something for $5 million and you make a wrong choice on something or underwrite it incorrectly. I mean, it can be $500,000 or $1 million loss, or, they can be very, very bigger problems. So.
Yeah, and we were able to KP on our first deal, which just closed recently, and that's a lot of fun too. I think we're on the same page there. When we got our first deal, we brought somebody in with experience as well to help us, qualify for the loan, help us to get that, deal done, and he helped us avoid a lot of missteps, and I think that's absolutely vital to new investors, is to be able to avoid those missteps. And now you're in a position where you can, help the newer guys avoid the missteps. And, something else that you said early on is that first deal is truly the gateway deal. I mean, it gets you on the map. It gets you some credibility with brokers. It gets you that, experience check in the box with the lenders. And, I mean, it's some people might say it's obvious. Yeah, of course, the first one's the gateway because you can't get the second without the first, but it's enormously easier getting your second one than it is getting the first. I'll put it that way. So
yeah, and I know I always use it as a frame of reference when talking to people, and I don't remember who I heard it from originally, but they say that, I mean, and I'm not a pilot, so I can't swear this to be true, but the analogy is always great where when most of your fuel is consumed in an airplane at takeoff. So trying to get up to the proper flying altitude is the hard part. And then once you're there, you're pretty much just soaring and using the wind and different things to propel yourself. And so that's where, like I said, sometimes that second deal is a lot of work. And some people, I know it's taken them a year, 18 months, 2 years to get that done. But I think proper networking, I think being in the right market, luckily I'm in a market where we can buy cash flowing assets. and the price per door is not crazy. So if I'm not living in New York City where I have my first deal has to be 1,000 miles away. I think all those things have helped. Yeah, I mean, like I said, I guess I would say something to a new person is to really, really look for somebody that you can work with on that first deal, because that's the one that, like you said, it could make you, but it could also break you to where you never do another one again.
Yeah. And I mean, you hear a lot of horror stories. I mean, I think there's a lot of people who were burned on, first deals or something like that. And there's enough horror stories going around that sometimes you tend to listen to those. But if you do things right, if you prepare well, you get the right advice from the right people, you can avoid a lot of that. So anyway, one question that I like to ask everybody, is about motivation, kind of deep down. So what is your big burning why?
So for me, it's really my family. I've got 3 kids. I'm married. There's been many, many years where I've been married 15 years where, like I said, that I've missed birthdays. I've missed, weekends, special events, Christmases, all those different things just due to my work schedule. And then, working lots of overtime on top of that to kind of fill the gap where, as we started having kids, I really started to be unhappy with the amount of time that I was giving away. And for me, it really, like, I was like, how do I get my life back? How do I get control back? And it is, and it was why I do what I do now, is because, I work a lot now on real estate, but I'm home on the evenings, I'm around more. And then for me, the exponential things that my kids will reap as they get older that I never grew up with. That's really why I do it right now. Just growing that, I mean, that I just love the edge that I have, that you get. I love the competitive nature. I love chasing deals. I love talking to investors and raising capital. I enjoy it as well. So,
yeah, and a lot of what you said, is part of the reason I got into, we have, in a lot of ways, similar professions. I was military, you're a firefighter, but, both in professions where, your time is not your own. You're almost, I'm not going to say forced because you choose to do it, but you have a certain schedule that you have to uphold. And I missed a lot of birthdays. I missed a lot of holidays because of my schedule too. And my big burning why, starting into this 2, 3, 4 years ago was to be able to spend that time with my family and not miss any other birthdays and whatnot. So anyway, a lot of what you said, sounded a whole lot like me, not more than a year ago. So anyway, so we talked about, one deal before. Is there anything else you want to share about, what you guys are looking for, or what type of deals you guys do now? I mean, I know you said you started out with some value add, and you're moving into to A class now. Do you want to talk about that for a little bit?
Yeah, so what we've done basically over the last, couple of years is we've vertically integrated our company to where we are finding deals, we're buying the deals, we're managing most of the deals that we do if it makes the most sense. And then we have brought in construction, whether it's our own guys that we employ directly, or we have a company that we've partnered with kind of here in Columbus, and they're doing a lot of our multifamily construction based on our business plan and like what we want to have done. And it's allowed us to scale, because we tried to figure out what are the bottlenecks for growth and then simplify those things. Or one of the books that I love and I always encourage people to read is Who Not How. If you've never read that, that was one that really kind of changed my mindset and in my view of things, because I was always raised with the notion that I had to do it, or I had to be the one that mowed the grass, or I had to be the one that, in these apartments, I had to be the guy doing the drywall, or I had to have my hands on the tools in order for it to be done correctly or to be done right. And that book just kind of teaches you and talks about how really to scale anything that you're doing, whether it's just using a better use of your time or you're trying to scale business, is finding what your sweet spot is and what you love to do and what you do great. And then anything else that's not, in that lane, you try to give it away to other people. And so that's something that we've really driven home and focused on doing, and it's allowed us to scale. And so, the deals we're getting into now, with COVID and the labor shortage that we're experiencing in Columbus, I mean, I think everywhere it's happening. It's made the C-class value add, where there are big heavy lifts. They've made them a lot harder and more of a time-consuming property, the reward can be tremendous, but the amount of time and risk that you have kind of getting it from purchase to stabilization, we've kind of gotten to a point where, like, is it, for the right deal, it's still worth it, but is that the only thing we're looking at anymore? And, again, being close to Columbus, the way that's appreciating, I know, like, there's constant growth. Intel just signed like a $20 billion contract to build a plant here that's going to bring a ton of jobs. So there's, the thing that we're also looking at is, if we buy a building today it's 30 years old, at some point, is it going to exceed the cost of to rebuild something like that? Is it better to buy a building now that's 5 years old? We might pay more for it now, but it's going to appreciate better if we sold it in 5 years than something that was already 30, 40 years old. Right. So it's just kind of, I think we're going to kind of continue to do both, but trying to diversify what we're going after and what we're buying. We can take on more when it requires less management, requires less construction. And some LPs that we talk to and investors, they like a little bit of both. They like being able to put money into a C-class value add, but then they also feel safer putting their money into something that's already cash flowing day one and doesn't need a lot of that stabilization.
Yeah, a lot of golden nuggets there to unpack. A couple of things you said, the C-class versus A-class, they both have different risk and reward profiles. And I think a lot of investors like to do exactly what you said, where you get a little bit of this and a little bit of that. And, it kind of balances out your risk or diversifies things a little more. And then, going back a little further in what you said, you talked about, some of the bottlenecks. If you're doing C-class value add, you mentioned you brought the construction team in-house. If you have the teams in-house, you're basically reducing one of the biggest bottlenecks. And we do C-class value add as well. And that's one of the biggest problems we've had, is being able to get crews into the units and turn the units when we want them to turn the units. And, I appreciate that you mentioned that, because, it's something that we're actually looking to do, in our short future too, is bring the management in-house and bring the construction arm in-house, so we can handle all of that ourselves and reduce the bottlenecks. So very much appreciate you saying those. That's good for me to hear anyway. Yeah. So last question before we bring on Lupei, what's next for you?
Just keep doing deals, I guess. We're trying to continue to grow in 2022. We're working with anybody and everybody that wants to come to the Columbus market, that is, if they're out of state or they're have no experience, but they want to get in. I mean, there's always a role to be filled in multifamily that we found. And, and maybe you're somebody that's listening that has no experience, but you have capital that you can bring to a deal, but you like Columbus, then call us. If there's people that have tons of experience and they get a deal under contract, but they keep finding out that they're not able to get the deal done because they don't have the experience for that size of a deal. Those are people that we would work with. And that's kind of what we're buying our own stuff. We're finding our own stuff. We have great broker relations local because we're here, and we're, like some of them my kids go to school with. I mean, they're just, we have different relationships with guys, these guys that are kind of the gateway keepers to some of these deals. And we're focusing on buying our own, finding our own, but then also partnering with anybody that wants to be in the Columbus market.
Yeah. I haven't done a lot of research myself on the Columbus market, but I know a lot of people that are, really high and really bullish on Columbus. So for people who are listening, if any of that interests you, definitely reach out to Seth and let him know. So that said, we're going to switch gears here and bring on Lupei. So Lupei, welcome to the Diary of an Apartment Investor podcast.
Hi, Brian. Thank you for having me, and nice meeting you, Seth.
It's nice meeting you.
Hey, well, thanks. I'm glad we finally got you on the show. We've been trying to do this for quite a while now, and finally you had a big enough break in the schedule to record something. So thanks for coming on.
Oh yes, I look forward to it for quite some time, for several months now.
Yeah. Now something that I'm excited to hear about. This is when we first talked, I remember it was just over a year ago. And I remember you telling me that, hey, I want to get into this multifamily thing. I want to get into this real estate. And then we probably didn't talk for, probably 6 or 8 months. The next time I talked to you, I think you guys had like 24 units already, So I was super excited to hear that. And I think you guys have done an amazing job so far. So I'm excited to hear your story today.
Yeah, Brian. So our first conversation, I think it was it was at the beginning of your apartment investing journey. And so was I, but I didn't even know anything about multifamily at the time. I was just looking at buying some single family home, just some rental property, you know, for ourselves, me and my husband. But we got to the point where we had 6 doors. And then you can definitely feel, you know, you kind of got to a place where your capital is running out and you don't really want to put anything else on your credit because it's kind of like get to a point just, you know, not good. And then I think that's when I started to, and I guess just being around in real estate, I started to hear more about multifamily, how, you know, how people can come together, you know, joint partnership to, you know, buy these bigger properties. And my first multifamily deal was an 18-unit JV with other students in the mastermind. So that's kind of where we got to 24.
That was some really, really quick growth. And, you know, I loved, you know, been loving watching you guys and seeing what you guys are doing. So that's awesome. But let's talk a little bit more about you, you know, a little more about your background and what you're doing now.
Yep. So as you already know, I have a military background, just like you. I've been in the Navy I just passed my 19-year mark. So in July, so I'm 19 and a half years active duty. And my military job is logistics, government contracting. So that's kind of like my expertise. I've been doing that for the last 20 years. How we got into real estate is because we came back from an overseas tour in 2018. We were just looking at buying our home. And we also sold a home I bought about 10 years ago in California. And in that process, it was just a lot of surprise. Like I did not expect that house appreciated as much as it did, because honestly, I didn't even look at it for the last 6 years. It was a rental. I was just so happy, like I'm not out of pocket. I'm breaking even. And then we were buying a house here in DC. So all that things just kind of like pointed to the same thing, right? It's like there's something going on with real estate.
It was similar for us. I mean, you know, I was full bore with real estate, you know, starting a long time ago, and my wife was not as convinced as I was. But when we sold our first house, incidentally, also it was a Southern California home. When we sold that after owning it for 8 or 10 years and walked away with almost 150,000, you know, my wife, I remember she just looked at me and said, "So real estate?" I'm like, "Yeah, real estate." And I think a lot of people have that same realization when they sell a house and they get that big check and they're just like, "Oh my gosh, you know, I earned $150,000 for spending maybe 2 minutes a month on this property." So real estate. So, well, cool. So let's talk about your motivation, your big burning why. You know, what is it that drives you?
Yeah. So Brian, when we came back to the States in 2018, you know, I was approaching 20 years and, you know, my husband, he was at like 30-year, you know, active duty service at that point. Of course, you know, naturally you think about the next phase and what's next. And really, it started with really a simple idea. You know, we just need to buy rental property and kind of go from there. It really is a journey. It just take on a life of its own, one thing lead to another. So here I am today, you know, trying to do multifamily.
Yeah. Awesome. Well, we're going to do our best to help you out with that. So, you know, hey, Lupei, we got Seth on the line. What do you want to do?
Hi, Seth. You know, I was listening to you talking about your first investment, and that something got my attention was, you know, I was curious if you had done any coaching or mentoring prior to your first deal, because from your story, it doesn't sound like you did. And what a courageous thing you did to jump right into a 50 unit. Like, I don't know, I think I have analysis paralysis, at times. I can kind of just think about a long time, try to learn for a long time, but not really, pull the trigger. So really love to hear how you did it and like what's going on in your mind.
Yeah, so I did not do any like official mentoring or coaching group or whatnot. I mean, I really don't know. I feel like that's kind of become a bigger thing over the last few years, or maybe I've just become more exposed to it. Back then I didn't really know. I knew, like, again, podcasts or YouTube or things like that people were doing it, but I didn't know anybody that was, I was trying to figure it out on my own. Like, how do I break into this? How do I do all these different things? And if I could go back and do it, if I could go back and do it again, or I was telling my old self this, I would probably recommend, linking up with somebody that's done it, because there's a lot of things that I didn't know when I bought that, which was, like for instance, the number one thing would be, we closed, I had $50,000 in the bank, that we had kind of had those reserves, but it wasn't close to what I needed to be able to do the renovations that needed to be done in order to get the rents that we were getting. And so once I realized that, I had to kind of scramble and go out and find other investors that would lend to me as just debt, no equity. And luckily I had people that knew me and knew my integrity and how I operate that were willing to do it. But, that right there alone could have made that deal go really bad. And, I wish that I could have reached out to somebody and, and asked about that, or, I shouldn't say that. So I did not have a formal mentor coach, but a firefighter from Strongsville that lives in Cleveland. I got his name through some networking, and I did talk to him a couple of times prior to buying. And, but he was the first one when I got the first rent roll, and I realized that, the economic vacancy was different than the physical vacancy. I was like, oh my gosh, what do I do? And when I called him, he was like, that's all the money you have? Like, and he really made me realize that not that I'm in over my head, but like that I went into this deal and I was undercapitalized. And so, like I said, in my situation, it worked out. But it could have been a situation where I would have been in really big trouble had I not been able to have those relationships already. So, I mean, I think that it's very important to get in, I don't necessarily know that you need to pay $20,000 to be in a mentoring group, but being around people that are doing it or have done it, I think is very, it mitigates your risk substantially.
Yeah, I agree. I think wherever you get the help, you get the help. You don't have to pay $20,000 for a program. I paid a little more than that, but for me, I think the reason I paid that big price is because it was a quick and easy solution. It was a fast, okay, I can get somebody to help me just by opening my checkbook up, or I can keep on networking and try to find somebody who could potentially do that. But a lot of good advice there. And, you definitely don't want to walk into, something like that undercapitalized, or, you could have a lot of problems.
Yeah. And I'm also very inspired by your background as a firefighter. To me, that's very similar to the military community. I'm sure, the current, the friendship and the relationship you have with your crew is very close knitted. Like one of my hope and goal is to be able to really make this accessible to a lot of the veterans group, military members, because I think people don't think you can own a property or have an ownership of a multifamily, because that just doesn't seem, something it's attainable. So I'm curious, how do you educate or communicate to your fellow firefighters, and how do you sell the idea or just get them, inspired by investing in multifamily?
Yeah, so that's a great question. And that's also kind of like a passion of mine is really helping out those that want help, right? That's probably the number one thing that I've realized, is that not everybody that's in the fire service or everybody in the military wants to hear what I have to say. You know what I mean? Or in your case, the military. And it's trying to generate a group of first responders that are interested in financial literacy and kind of growing that knowledge base. And then here's how I did it, right? There's probably 1,000 different ways to do it. Here's how we've done it. Tim Shaw, who's probably my closest and main partner in our team, he's also a firefighter. And that was something that drew us together because we spoke the same language. We operate the same way. We have the same, background and kind of views on how things should go down. And then this year we've started, it's called Firehouse Bros, but it's going to be kind of like our educational kind of way to go about like catching the attention of other guys, firemen, police, first responders that, again, our goal is to just let them know, hey, there is another way. There is an alternative investment vehicle to just doing the 401k or, putting stuff in index funds or whatever the financial planner talks about. And then here's our story and how it's changed our lives. And so that's something that like this year that we're kind of at a point where, I'm with you where we want to kind of give back. And I always jokingly tell people that, the first time I read Rich Dad Poor Dad, it was like I ate the red pill in the Matrix. And now like my whole world has been turned upside down. And I want to help other people get to that revelation, because I think that that's really part of it is if you weren't raised with somebody in your family doing real estate or somebody that was investing, my mom and dad both worked until their 70s. Neither one could stop working if they wanted to because they had no retirement. They had no savings or whatnot. And so, I would have went right down that path if it wasn't for somebody else introducing me to the Rich Dad Poor Dad book or, like I said, real estate in general. So that's kind of our plan to give back. And then, like I said, just helping those that want the help, I think is, I think understanding the room you're in is super helpful too, because, your time is valuable, my time is valuable. And I don't want to force feed people, hey, you should invest in real estate. And then they're not even open to the idea.
One thing, I was very careful not to try to solicit at work. I think, there's kind of an ethical thing depending on what job you have, right? But something that really helped me is, I would take a lot of, days off, paid time off, leave days, whatever you call it, to do real estate related activities, And so when I'd take a week off, I'd go to a conference or come back, or I'd go down and look at properties and come back. People would always say, hey, how was your leave? How was your week off? And I would just tell them, hey, we went down to South Carolina. We walked a couple of properties. We put in an offer. We're really excited for it. And what I found is just by making comments like that, the people who are interested, who want to know more, self-select, and they will start asking you questions. So, it's really easy to do. You do what you normally do. You interact with people and you just let them know what you're doing. Hey, yeah, I went to this great conference last weekend. I loved it, and this is what I learned. And, without promoting myself or trying to push it in the workplace, several people that I've worked with have invested passively in our deals, and it's stuff that they come to me and say, hey, you need to tell me when you have your next deal. And it's like, okay, well, I'm not soliciting. He came to me. So, all right, here we go. So anyway, some employers kind of have ethical lines behind that. Others don't. And I tried to play it super safe, in the military to not cross any lines on that.
Yeah, absolutely. I know what you mean. Yeah, Ryan.
Yeah. So anyway, well, Lupei, we got time for one more question if you got another one.
I guess I would love to hear, because I feel like the market is so competitive. As a new investor, I really do feel the difficulty of getting my first deal. And then I know the law of the first deal is like so significant and it just carry you forward. What advice would you give new investor that's trying to break in the market right now, being the way it is? Like, where should I focus my energy on?
Yeah. So I mean, being in the Midwest, I mean, I always would say buy for cash flow. And so the first deal you get done might not be in a huge metropolitan area. Like I said, when you go into some of these bigger core markets, you're fighting against people that are institutional buyers that have tons of experience, that have tons of team, tons of endless capital. And it definitely can be harder to get a deal in that situation. And it can be very hard to get a broker on the phone in an area like that where, they may be receiving 100 emails a day or 25 phone calls a day, and they're not going to take the time, because they want to bet on the assurance that you'll close. If they have other people they can spend their time with, they know will close. It's really hard to kind of get in that, get your foot in that door. But what I would say is that find a market that is kind of maybe even like a tertiary market that you feel is comfortable, that you feel is safe, that cash flows well, that, maybe it's in your backyard, maybe it's in, area where you have family or some, you have some boots on the ground there that you can kind of understand the market better. And maybe that's where you try to go get your first deal done at. And once you have it done, then you can come back to that core market and say, hey, I have a resume now, and we here's our successful deal. And maybe we didn't go full cycle, but we've got to refi, and here's what we did. And, and it just gives, not only, gives you your first deal, but it gives future investors and any broker. Now you have you can talk to them about that deal, or you can talk to them about what you did, you've done. And it's different than calling them, and they can tell pretty quickly if you've never done a deal before, or if you tell them right up front, it's usually a pretty short conversation.
Yeah. And I would add to that. I mean, you have some really good cards to play. You have a JV on an 18 unit, you have 6 units of your own. I mean, you have 24 units already, and you can leverage that and use that to gain. You already have, your first deal. I mean, you may not have been like the lead sponsor or whatever, but you're one of very few people that close on an 18 unit property. So use that to your advantage. And I think for you, it might just be a little tweak to the mindset of, you're not looking for your first deal anymore. You're looking for your second. And then go from there, because, and this is something my wife and I talked about a lot, especially when I deploy. She'd always say, I don't want to use my husband's deployed card. And I'd always tell him, like, if you have the card, play it, I mean, and you have 24 units, play that card and use that card. And, like I said, you've got your first deal, you're looking for your second. And that, I think if you just made that small little change to your outlook and your attitude, that second deal is going to come real quick.
Okay. Thank you for that, Brian.
Yeah. So anyway, we are about out of time. So thank you so much to the both of you for coming on the show. And one last question for each of you. How can listeners learn more about you? Seth, you go first.
All right. You can find me on Facebook underneath Seth Teagle. You can go, we have the group the stream group has a Facebook page as well. I'm on LinkedIn, on Instagram. And then you can go to our website. It's www.thestreamgroups.com and kind of take a look at our portfolio and what we're into and see some of the other partners. And then you can contact me directly through that website as well, if you'd like.
All right. And we'll have links to all that in the show notes. And Lupei, same question for you. How can listeners learn more about you?
Social media, you can look me up on Facebook, LinkedIn, or on my website, which is www.sisterhoodrei.com.
All right. And same thing, we'll have links to that in the show notes. So anybody listening, if anything Seth or Lupei said, resonated with you, definitely reach out to them. And same to me, reach out to me too. That said, thanks again. And this was a lot of fun.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, you're missing out. Get 30 days free by clicking the link in the description or go to thetribeoftitans.info. And we'll see you there.